Australian pension funds are looking to boost their investments in the US. Superannuation executives met with the Trump administration and their officials last week to discuss investment opportunities. About $400 billion of super fund capital was invested in the United States. That's expected to exceed $1 trillion by 2035. Australia has the fourth largest retirement savings pool globally, but it touts itself as the fastest growing. It's expected to become the second biggest in the world by 2030. Well, Kelly Power, who's the CEO of Superannuation at Colonial First State, joins us now. Kelly, really great to have you with us. And I mean, in a way, it's a great problem to have, to kind of work out what to do with this growing pile of investment cash. Why to the US is there so much interest right now?
Oh, look, I think it's patient capital, it's long-term capital. We're a very sophisticated market from an investment perspective, and yeah, like it's sort of an open door when you go to the US in terms of people looking for investment opportunities. In our fund, it's about $8 billion invested with the US, and we're increasing that all the time through our partnerships and moving into new asset classes as well.
There's a lot of sort of anxiety in terms of how that money is deployed, right? Are you sort of constantly looking at new products and offerings?
Yeah, look, so obviously equities is a big portion of it. 75% of global equities sits in the US, so it's a big part of our allocation. But we are increasingly looking at infrastructure, we're looking at private equity and other asset classes, and really just responding to opportunities to get the best outcome for our members.
What sort of investments abroad are you looking at? Are there sort of specific sectors, and how, I guess, complex is that navigating that landscape given the policy outlook is so uncertain right now?
Yeah, for us, we are a small investments team, about 30 people, and so we really just respond to whatever opportunities are available. So there's no real geographic tint. There's a lot of money going into unlisted assets. That's not, not just a US theme, that's globally. A lot going into private equity, a lot going into private credit, and a lot going into infrastructure. So we're looking at all those opportunities, but for us, we really look through partnerships. So we have a partnership with BlackRock, for example, and we look for local teams that are onshore to help us deploy the capital.
Private credit is a really interesting one, and when we spoke to actually ASIC just a few days ago, there are obviously concerns over sort of transparency and the regulation side. How compelling is it for you as an asset class?
I think it's important from a diversification and return perspective, and for us looking at making sure that we're not concentrated with too many partners, making sure that we don't have concentration around too many specific types of loans or investments is important. From ASIC's perspective, they're looking more sort of systemically at the whole system. I think their report did say that it's not a concern at the moment, but obviously it's a growing asset class. So we're making sure that we've got the right partners with the right track record in this space.
Is private market reporting something that you think will reform or change?
Based on what I saw in the report, I would suspect that there will be more change around that, but I don't necessarily think it's an issue at the moment.
We're talking a little bit about sort of attitudes around retirement and anxiety, particularly amidst, still high inflation and a cost of living crisis. What are the main themes that you kind of see when you speak to people about, what happens down the track?
Yeah, we recently did a survey actually, and cost of living was the greatest concern for Australians, no surprise there. But what we did see in our report was that the majority of people that are moving into retirement, it's something like 60%, don't feel comfortable about the retirement that they're going to have. And about a quarter of them in retirement are still paying debt, so using their pension payments to pay debt. So it has to be a big focus for us as superannuation funds and the government in terms of providing advice to those individuals. Retirement is really hard to navigate. It's very complex, no two retirees are the same, so having support, guidance, help, really important.
What would you like to see from the government? Obviously, election year, and we're expecting that to be announced really sort of imminently. Are there policy settings from that level that you think could help?
Absolutely. So the Quality of Advice Review report, we're still waiting to see the Tranche 2 reforms come out. And so that Tranche 2 piece is really the one that will deal with this advice accessibility issue. So the average cost of advice now is about $5,000. I think the average you need to have is about $1 million. And we know from our membership that the people that need advice the most are those 200, 300,000 where you can optimise your age pension. So that problem has to be solved. We need to get more help to those people, and that really is contained in that Quality of Advice Tranche 2 reform.
There's so many sort of unprecedented risks and unknowns at the moment, from a political, geopolitical, trade front, right? Do you have a strategy and plan in terms of navigating volatility in global markets, or is it something that you kind of have to take step by step?
Oh, look, this is, not our first rodeo with volatility, so we know how to sort of face into that. This super is a long-term investment for most people, but it doesn't mean that, in particular, our retirees don't have concerns and questions, aren't likely to ring us and say, well, should I switch to cash, for example? So we have good processes for helping people through that and ensuring that they don't react to, uncertainty or small sort of components of volatility. And so we support our members with, communication, education, and have guidance teams that help with that too.